Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Sunday the 8th of November, Remembrance Day, and we're starting off with 88 Energy, where you can see that there was a nice breakout on Friday through the rising 50-day moving average at 0.34 and also that September resistance line at the same level, so above the 50-day line, looking for an initial target over the next week or two of the 200-day line at 0.48, and then hopefully by the end of the year up to the top of that rising trend channel from April at 0.65. Some stocks today have been missed out, and some stocks are those which are going to be reporting. We'll have news over the next week. We're looking at Alba Mineral Resources next, where we've got a support line there from at 0.45, and we've got a resistance there at 0.5, so really tightly confined to a range there. An end of day close above 0.5 should be enough to get the shares up to a new bull run, hopefully towards 0.8 or maybe even a bit more than that, with the following 1 to 2 months, and the bull argument really in place while we hold above the 50-day moving average at 0.38, but hopefully the shares won't even go below the 0.45 level. Beximco is next, and here we've got a wonderful uptrend here, a rather wide channel there from May, top of the channel heading towards £1, and the breakout this week through the initial November resistance at 63 pence, so ideally above 63 pence. We're heading towards the £1 level, which is, if I just adjust the trend line there, that's the £1 level, and at this stage only really back below the 50-day line and the floor of the channel from May at 59 pence, really delaying the upside scenario. We see Block Energy come and go from the Bulletin Board Heroes over time, and at least at this stage it's looking one of the better times. We had that full storm move in August through the 200-day moving average, and in fact we've had the shares getting blocked by the 200-day line on several occasions in the recent past. But it looks like with that weekly close well above the 200-day moving average at 2.6 pence, while we're above that, heading towards the top of that rising trend channel from April at 4 pence. If you're an optimist and or a fan of the stock, you could argue that it's not 4 pence that the shares are going to head towards, but perhaps 5 or 5.5 if the trend channel is as I have just drawn it now, rather wider and from February. So let's see if that pans out. But at least initially up to 4 pence, I think would be a reasonable target over the next few weeks. On to Bahamas Petroleum, which doesn't have any such problems. A strong push there through the triangle from beginning of March, and also through recent resistance at 2.6 pence, while we're above 2.6 pence, looking for at least 3.5 pence, which was June resistance, and then best case scenario target over the next couple of months up to 7 pence, which is the top of the rising trend channel from April last year. So looking quite solid there for Bahamas, especially after recent extended consolidation, basically sideways since June. Another stock which I've been eyeing up, but it was never quite the time to look at it, is Conduity Capital. Here lots of sort of buzz over recent weeks, but the shares haven't actually moved. The first opportunity to say that there's been a bit of a breakout came on Thursday with a break of that October resistance line there at 1.25 pence. While we're above that, looking for the top of the broadening triangle from October up to 2.25. If you are cautious on the shares, which some may still be, you'd wait for an end of day close through 1.5 pence, which is recent resistance, just to get a bit more momentum in the situation. Hopefully 2.25 by the end of the year for Conduity. Onto a stock which has been on the back foot since spiking there in August up towards 0.6 pence, so we come back down by 2/3. A little bear trap there the end of last month below 0.2 pence, but hitting the 200-day moving average at 0.2 pence on several occasions intraday, so that does suggest that we're finally on our way. If you're an aggressive trader, you'd be buying against the 200-day line. If you're more cautious, you'd wait for an end-of-day close above the August resistance line and the 20-day moving average at 0.25 pence. To give you initial target there at 0.35 plus, which is post-September resistance, and obviously then looking for the top of the channel from March as high as 0.6, perhaps on a 1 to 2 month time frame. Onto a stock which doesn't get much airplay, let's say, and that's Global Petroleum, but as in the case of many shares that we've been looking at today, there's been a long consolidation here, and it may be time finally for the shares to break out of that consolidation. Recent support for the stock around the, I suppose that's, 0.7 pence level, and while we're above that, looking for a potential recovery here. Breaking through 0.8 on an end of day close could at least deliver a move towards the gap, the top of the gap there from September, around 1.2 pence, and the 200-day moving average. Bigger picture target, while we hold above 0.7 on a 2 to 3 month view, is to return back to 1.8 pence and the top of the post-February range. Onto a stock which has been difficult to get a handle on over recent months, basically just tracking sideways, but again, it looks as though we're finally, after months, well, at least since the beginning of June, months of consolidation, either side of 0.4 pence, Strategic Minerals finally ready to go. We had that final bear trap as well, which is normally a good sign. Final bear trap was below 0.35. That just narrowly broke the 0.35 June low, so tend to get that sideways churn, then a final bear trap just to evict the weak hands, and then up. Good weekly close above the 50-day moving average at 0.41, and while we remain above the 50-day line, looking for at least 0.5, obviously, and then hopefully, as a best-case scenario, the top of the post-June triangle at 0.7 pence by the end of next month. So let's see if the bear trap and the bullish divergence in the daily chart there will do the trick for Strategic Minerals. Just 3 stocks to go now. First is Seeing Machines, where we've had a bit of a spike to the upside on Friday. Looking good in terms of a move towards the top of the rising trend channel from way back in the summer of last year. That's heading towards 8 pence, and 8 pence the target there, while we hold above 5 pence, which is recent resistance on an end of day close basis. Only back below the 50-day line at 4.3 pence, really delaying the upside scenario. Interesting times at Supply Me Capital, where I think things have turned a little bit nasty in terms of the way that the company's been treated of late. A bit of trolling going around. But what's interesting here is that we had that false break towards 0.7 pence last month, and then the drift back. But at least while we're above the late September support at 0.38 pence, which is basically former April resistance, then the upside just about remaining intact, and hopefully then a 0.4 to 0.6 or 0.7 range is still on the cards for Supply Me Capital. Finishing off with Zoo Digital, where you can see that we've got stock which is looks like it's bumping along the bottom here. Support there in the 50s, low 50s, and slight bear trap effect as well on Wednesday. Looking to break that line of resistance from July at around 57 pence. I would say it was 58 pence, in fact. End of day close or end of week close above that should take the shares back up towards the top of the range from post-May, which is up to 80 pence. And only an end of day close back below 50 pence, really delaying the recovery scenario there for Zoo Digital. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.